Inflation's back and it's rising even faster. In my last video, we talked about how inflation is reaccelerating, and just this past week, we saw clear evidence of this. So today, I'm going to break down exactly what I'm doing for the rest of 2025, the moves I've made this past week, and what I'm buying right now, and how I'm positioning for what's next. Even though inflation is still well above their 2% target, the Fed is expected to keep lowering rates. What does this tell us? To me, it's crystal clear. You have to be invested just to simply keep up. Cash is losing value, and sitting out means you're falling behind. But it's tricky because, on one hand, stocks, especially tech and growth, look to be real expensive. Real estate is high, but in a correction. Gold and crypto are also very high. Yet, on the other hand, we already know inflation isn't going anywhere, and it could accelerate even faster. And the dollar has taken an absolute beating in 2025. That's why I'm staying invested. I've got a safe cash reserve, no bad debt, and a long-term mindset. I'm not a financial advisor. This video is for entertainment and informational purposes only. Everything I share is just my personal opinion. But please do your own research before investing. Never blindly trust a random dude on the internet. I've got to admit, I fell into the trader trap this week. I grabbed some Beyond Meat during all the hype at an average of $3.50 on the day that it shot up to $7 and then fell down to like $2. I even bought a few call options, lost all those. I've been following an account on X that tracks big whale call options or put options, and I tried a few of those plays too, thinking, they must know something or something, including ones on energy fuels and ticker UUUU. I grabbed some calls on Pfizer, ASST, all based off of this X account calling out big calls. But here's what I soon realized. Trading like that is stressful. I found myself checking my portfolio every 5 minutes. And I was blindly speculating off information from some random dude on the internet. So I'm going back to what actually works. Recurring buys into solid long-term investments. Maybe throw in an occasional option when I see real opportunity, but only with money I can afford to lose. I wish I knew more about call options during the dip in 2020 or 2022 or Liberation Day, but you got to learn somewhere. What I'm buying right now, I'm heavily bullish on Amazon. I buy it every single week automatically. If they're going to own everything, then I want to own them. Last week, AWS went down and broke half the internet. That outage proved just how essential Amazon really is. When one company going offline affects streaming, finance, even government systems, that's not a weakness, that's dominance. I work in retail and trying to sell phone cases or chargers. You don't believe I'm sure you can believe how much customers, I'll just Amazon it. For more defensive investments, I buy VT for total global market exposure, SCHD for a defensive dividend paying base that's less reliant on tech, and SCHG for that high growth exposure because, let's face it, tech might just keep running. Although I buy less SCHD nowadays. These three ETFs give me balance, stability, income, and growth, all with super low expense ratios. Some people would say that's too diversified, and maybe they're right, but I'm fine with a little overlap if it helps me sleep at night. There's your little rhyme for today. Honestly, though, most people can just pick one or two or even all three of those funds, just set it and forget it and be good. Honestly, you don't really have to overcomplicate it. I keep stacking Bitcoin too. At this point, I see it as a long-term conviction, not speculation. Sure, it's super volatile, but it's my hedge against everything else. Individual stocks I buy Coca-Cola and McDonald's for stability and dividends. I love them. They're classic consumer staples that hold up during inflationary times. Both PE ratios are in the 20s. I'm buying Citi for some bank exposure and Pfizer for some pharmaceutical exposure. Both of their price to earnings ratios are dirt cheap, especially Pfizer's forward price to earnings ratio. Both pay dividends as well, and I'm a sucker for some dividends. And yeah, I did buy a couple Pfizer calls, getting greedy. I hope those work out next month. I'll keep you guys updated. I still have a real estate plan. On the real estate side, I'm paying down my mortgage as fast as possible with extra cash. I'm hoping to refinance it at a lower rate soon. Currently in my neighborhood, rents are 1,600-ish, give or take 100, and my payment's 1,750. So my goal is to get that payment low enough to cash flow positive if I can rent it out later. Honestly, though, I think in the next 1 to 3 years, this could be an incredible time to buy real estate if you're prepared and, bad debt free. We've already been a year or two into a real estate correction. So long term, real estate's just going to keep going up. So thank you for watching all the way to the end. If you enjoyed this, please hit that like and subscribe button. It seriously helps me out. Follow me on X if you'd like. I follow back, and I would love to hear your opinions of what you're doing in this economy. Comment on the video what you're doing. I love talking finance and the markets, and I'll still post the occasional RuneScape or other video game videos. As always, though, I'm just some guy on the internet, but I appreciate you all for tuning in. See you next Sunday.